Hi, this is Amir with the Bulletin Board Heroes here at Zacks Traders Cafe for Wednesday, the 17th of January. Not a good start to the session with the market already down nearly 2% after disappointing inflation figures. We had the warning on the RSI, or in the RSI window, with that RSI failure at neutral 50, and that happened a couple of sessions ago, so there was warning that we could break down. I think I did mention that. Floor of the old channel there around 75.50 with the 50-day moving average, and below that we have the risk of a test of October support just below 7,300. Worst case scenario by the end of next month, or even sooner, would be that we head down to the floor of that falling trend channel from last February 2023, that is, at 71.30. Only a swift break back above the 50-day line, really negating that scenario. Moving on to the DAX, which has also broken down after finding support initially at old July resistance, 16,500, below 16,500. We were fearing a potential move down towards August-September resistance at 16,100. Might get away with a rebound off the 50-day line just under 16,300, but I suppose the way things are shaping up now with that triple failure to break 17,000, we are looking towards the 16,000 zone. RSI now also comprehensively below neutral 50 after a couple of attempts to stay above there. Moving on to the Dow, and here the fears that this trend channel there from October was too steep appear to be correct. We were factoring in that this market would have to test 37,000 and then below that as low as initial December resistance at 36,300, and I think that's probably where we're looking at the moment in terms of the upside and end of day close above 37,500. Probably the minimum now to get us back on track for a push through 38,000 plus. Moving on to Bitcoin, which felt a little bit disappointed after the ETF news, but it is consolidating well either side of the 50-day moving average and at and above that rising trend line from back in October. That's around 41,000. Above that, we're looking for a break of 43,500 or so to give us a retest of resistance towards 49,000 from earlier this month. On the downside, worst case at the moment, 38,000 and initial November resistance. Got to look at gold now and see where that is at the moment. Here, the struggle has been to stay above the 50-day moving average. That's at 2024 now. Below that risks a move down to the 200-day line at 1980. You can see there's been an RSI failure just above neutral 50, so that does suggest that we've got the prospect of a break of the 50-day line and a push down to the 200-day moving average. We're really safe on the upside, safe inverted commas, if we can break recent resistance at 2070. The small cap stocks are next, and we're starting off with Arc Minerals, which has been all over the place in the recent past, but we've got a falling wedge breakout here through 2.8 pence. Above that, we're looking for 3.6 pence as soon as the end of next month at a November resistance line projection, top of that triangle there. And the upside valid while we hold above the 2.6 pence zone, which is basically post-October support for the shares. Stock that doesn't get mentioned very much here or anywhere else is Base Resources, but here we've got a bear trap island reversal, so gapping down in November and then gapping up twice or three times actually since then. Rising 50-day line as well, so that suggests that the minimum on the upside will be 10 pence, which is the top of that falling trend channel, and ideally looking to 12 pence by the end of next month while we're above, certainly while we're above the 8 pence area. One of the best performers over the turn of the year has been Corcel, and we had our target at 1.3 pence, upgraded from various targets on the way up, previously 0.8 and then 1 pence as well. Still looking for the 1.3, maybe 1.4 pence while we're above the initial January resistance there at 1.5 pence. So a big win there on the technical front. I didn't cover EQTEC yesterday, largely due to burgeoning senility, but I remembered to put it in today. And here it's interesting that after the funding news, the shares are sort of perched just above the 50-day moving average at 3.6 pence. Above that, looking for up to 5.2 pence by the end of next month, although it has to be said that the trend here has in general been rather painful, so it may just be a false dawn. There is some backing from bullish divergence in the RSI window, so that's why we're counting on this holding above the 50-day line over the near term. Below that, then it's probably the same pattern as before on the bearish tack. See one or two people getting excited about Ethernity networks, and here we've had a few false dawns and spikes all over the place in the latter part of the autumn. Current block on progress is the resistance line there from December. That's running through at 1.2 pence. So looking for an end of day close above 1.2 to give us up to 2.3 pence by the end of next month. If you're really cautious, you wait for an end of day close above the 50-day line at 1.3 pence. But want to see the share stay on the right side of the 1 penny level. Moving on to a requested stock, which is Fusion Antibodies, where it's been suggested to me that there's a bowl forming. Well, I would say there is a little turnaround forming at least. We've broken above the 50-day moving average, which is now starting to curl higher, which tends to be a good signal in its own right. Top of the channel that we've got there since September, heading towards 8.9 pence, which seems like a long way away at the moment. Perhaps if you're cautious, you wait for a break of the recent resistance, 5.7 pence, before targeting a retest of the recent range highs towards 9 pence. But at least while we're above the 50-day line at 4 pence, expecting an attempt on a rally. Good to see the Nexteq making progress after a long time when it's been rather quiet. Firing strategic. Here we're just breaking the 50-day moving average there at 4.8 pence. Above that, we're looking for 6.1 pence by the end of next month. And all the while, we'd like to see the shares stay on the right side of 4.5 pence, which is recent support for the shares. But bullish divergence and a falling wedge breakout helping the cause there at Firing. A stock which I haven't seen anybody talk about ever is coming up next, Nexteq, and here we've got this classic sideways shuffle above a rising 50-day moving average. Looks like a mid-move consolidation, so a break of £1.20 could take us up to the next leg, which would be £1.45 by the end of next month. Ideally, we stay on the right side of £1.10 in the meantime. Great update from Poolbeg today, and the company obviously making great progress. Here we bounced off the floor of the recent range, which is around 8.75 pence. Top of the range around 10 pence, and a break of 10 pence should take us up to 11 or 12 pence as soon as the end of next month. Back, by the way, that the 50 and 200-day lines are both rising, and we've had a bear trap rebound from below that 50-day line around 9 pence, but like to stay above 8.5 pence in the meantime. Most of the calls on the next stock have been correct in the recent past, which is not something you can say with great confidence on every situation. But here we've got Predator, which is gapped up through the 50-day line earlier this month and has made good progress. The main resistance line there now around 11.9 pence, and above that we're looking for 15 pence as soon as the end of next month, or even sooner, funding issues notwithstanding. Stock which has started to stir in recent days is Synergia, and here we've got the shares now well above the 50-day moving average at 0.08 pence. Initial target here, that May resistance line, and the 200-day moving average at 0.11 pence, and news flow permitting, looking for 0.16 by the end of next month, while we remain above that 50-day moving average area. A stock where somebody has pointed out that it's an interesting charting position is the Mission Group, where we gapped down back in October and we've gapped up today, so that's a bear trap island reversal. Looking for the shares to fill the gap up to 34 pence and maybe even stretch up to the 200-day moving average and the top of that rising trend channel from October at 36 pence. Stop loss here around the floor of the channel there around 22 pence. That's it for me today. More updates tomorrow.